In this part of the competition, you are taking on a fictional business identity and assigning a fictional business identity to the judges. Please make sure everyone knows who you are and who they are before you begin. You will have 25 minutes to describe the legal, financial, and ethical dimensions of the problem and to recommend a solution that passes muster on all three counts. During this time, teams will be uninterrupted. When you are finished, the judges will ask you questions for 10 to 15 minutes. During the Q&A, both you and the judges stay in character. After the Q&A, the judges will give you feedback outside of the role playing. So 25 minutes, 10 minutes, and then unvarnished feedback.
Great, and thank you. So with that, we'll get going. Good morning, everyone. Thank you for coming to today's meeting. We are glad to be presenting to Merrill Financial Advisors. My name is Ben Hall, and we are the Inclusive Investing Consulting Group. Today, we are presenting on SPACs and wealth inequality, an opportunity or risk for retail investors. So first, before we get into the technical analysis, we thought we introduced this graphic that we think is pretty telling. So what happens to $1 a day for 20 years? The graphic on the left shows $1 a day for 20 years in a traditional savings account with a interest rate varying from 0.75 to 1.25% annually. As you can see, that is a very linear line. The initial investment is just over $7,000, and after accumulation of interest, that investment is around $8,000 conservatively. On the right, we used a stock choker calculation to evaluate $1 a day in the stock market every day since March 30th of 2001. So once again, the same investment of just over $7,000, and that would return a $25,000 or over 240% increase.
Now, if we expand the time horizon even further, we can see that time in the market really does beat timing the market. Over 40 years, our $14,600 total investment will grow to nearly $230,000, which is almost a 1,500% return. This just goes to show how important investing, specifically investing in the stock market, is for wealth growth and accumulation, as well as creating generational wealth that can be transferred from one community to the next generation.
Thank you, Anthony. Knowing that it's really important to invest, stock ownership statistics in the United States show a really concerning story. 90% of families in the United States only own about 17% of overall equities and only own about 7% of stock, while the 1% own 38% of overall equity and 51% of stock. And this is the problem that we want to talk about today.
As for us, we are the Inclusive Investing Consulting Group. I'm Garrett Maley, and my colleagues today are Anthony Catino, Erica Fan, and Benjamin Hall.
So while constructing our solution, we thought it was important to take into account your, Merrill's, main goals. One of your goals is to equip visitors with the knowledge they need to make smart financial decisions, whether they are clients or not. And so we want to help you to enable investors of all kinds to be able to make more informed investing decisions.
So let's briefly go through our agenda for today. We will first introduce SPACs, what they are technically, and what type of role they've played in the stock market over the past year. We will then talk about the issue of economic growth and wealth inequality. We'll talk about what Merrill has been doing to address these concerns and advance our preliminary recommendations. We will then go through the financial, ethical, and legal considerations of those recommendations before we reach our conclusion. So the question is why are we focused in on SPACs for wealth inequality? And the short story is that we know due to COVID that this past year has been very turbulent in the stock market, but we still have seen institutional investors increasing wealth and having these large gains, and part of that is attributed to SPACs. So now, Anthony, we'll dive into more of the technical aspect of what is a SPAC.
So a SPAC is a special purpose acquisition company, and it truly was the IPO of 2020. There was a huge growth, even though SPACs have been around for a while, and SPACs can be used as a substitute for a traditional IPO. This is because since the company that is going public only has investments and cash on their balance sheet, it reduces the regulatory bind on companies who are looking to go public by allowing the SPAC to go public and then merge with the target company sometime after the initial IPO of the SPAC. This is especially useful for raising funds in times of market volatility, where it might be more difficult to IPO because of the turbulence in the market. And additionally, SPACs allow for much of the large gains received at the beginning of a stock's life cycle, which have usually allows these gains to be realized for investors of all kinds. Now, traditionally, IPOs were held off only to more sophisticated investors, and these investors therefore had a greater advantage in getting in on the ground floor of what could turn out to be some really great investments. And so SPACs kind of allow more people to have access to these opportunities from the very beginning.
So this quote just goes to show just how much SPACs have gained in popularity in the past year. They have raised a record of $82.1 billion in 2020. That is a six-fold increase from last year's record high. So clearly, SPACs have been able to make companies go public in a year where the market has been extremely volatile. This graphic just goes to show just how much the popularity has increased. As you can see, SPACs have been around for a while in the early 2000s, using them to some extent. And you can actually note that in the last period of major market instability, IPOs were used in the 2008 financial recession. The 2020 bar there, you see nearly half of all IPOs are, or money raised for IPOs are coming through these blank check SPACs. So it's important to talk about market volatility and why SPACs are so effective in times of market volatility. So you would think that due to coronavirus and all the complications that have come with it, that this past year would have been a pretty bad year for investors. But due to SPACs and other opportunities, we've actually seen a lot of increases in wealth through the stock market. Here are just some of the examples of SPACs and the mergers they've made through these tough times. So CFII was a SPAC company that recently merged in March and is now public as View. That is a smart glass company that aims at providing business solutions to large corporations. I believe they already have a contract with Uber and their offices. We have DPHC, which merged and became Lordstown Motors Corp. And then a very popular SPAC that made the news, VTIQ, which initially was at around $10 to $12 a share, merged and bought Nikola and is listed as Nikola. And that stock jumped from nearly $15 a share to over $80, touching $90 a share in the matter of one day.
So let's talk about the right problem that we want to solve today. Let's look at wealth inequality in the US. As you can see in the graph, over the year, wealth inequality has been getting worse. The upper income family has raised their wealth from 60%, 79% from 1983 to 2016, while the middle class family had lowered their wealth from 32% to only 17% within the same period. Now, if you look at the graph on the left, you can see that in 2016, the middle class family only owned about $100,000 in wealth, and the upper class family owned $800,000 in wealth, which is 8 times for the normal middle class family. This is especially getting worse during COVID, during the pandemic, because many families are losing jobs and they don't have the wealth that they already had in order to wade through COVID. And it also has widened the racial disparity. If you look at the racial wealth divide, in this graph, you can see that from 1983 to 2016, a normal white family has gained around $40,000 in wealth, while an African-American family has lowered their wealth from $7,000 to only $3,000-ish. And during COVID, these families were hit harder by the pandemic and a lockdown. Also, we want to look at wealth inequality through the gender lens. Let's look at the gender. So as you can see, the women, you tend to use less professional financial advisor services than men. Around 33% of women use a financial advisor, and around 45% of men use financial advisor. This gives them an advantage when it comes to investing, because you can see on the right here, when they're asked about where they're gonna save their retirement saving, many women are not sure about where to invest, and many of men already invested in multiple different type of investments, such as bond, money market funds, stock, and cash.
Now, let's talk about where you, Meryl, are currently involved in this. So currently you already have an app, which is providing great information on market trends and emerging industries and retirement. Not to mention, you're giving access to free trading and assistance from a broker with a fee. In fact, this all makes sense considering how your parent company, Bank of America, has been providing these benefits for decades, helping provide financial education and the opportunity to trade for that long of time. The only problem is the market isn't all that diverse.
So when investigating how Merrill is doing in terms of providing access to markets around the world, and specifically in the US, we decided to see how their online trading apps stacked up against their competitors. And a simple search query shows that it is certainly not the most popular one in the market right now, and we think that we can help you guys to change that.
So how can Merrill make investing more sustainable? We believe that increasing the accessibility of investing through financial knowledge and financial education can bring access to a crowd of investors that is new to the market and is looking to make these wealth gains that will help them in the long run. That leads us to our preliminary recommendations. Merrill, you should develop or acquire a trading app focused on the retail trading market to ensure that we are capturing that age range and that market of people who are new to the market. We believe that we need to communicate the opportunities and risks of SPACs, as well as opportunities and risks of investing as a whole, educate communities about financial investing, and in all, become the trustworthy voice in a crowd of questionable platforms. You know, we've seen in the news recently trading platforms such as Robinhood, Webull, that are geared towards the retail investor, but they aren't exactly trustworthy. We see in the news different reports restricting trade or questions about where they're getting money from, and very questionable things. Merrill, being a trustworthy Bank of America company that has been established for so long, we see that they have an opportunity to enter this space and provide that trustworthy voice to this new investing crowd. Now we'll dive into our financial, ethical, and legal considerations.
Now, starting with cost benefit, mainly on the financial side, a major cost is going to be creating the app and doing some marketing. Though we do believe that the app creation can be reduced using some current technologies that Merrill already has access to. Whereas the benefit is that it improves access to all sorts of groups and builds new customers, which will then be recycled into using Merrill's more lucrative advantages. Now, moving on to some ethical benefits, costs and benefits. For costs, it can definitely be very difficult for investors to get the risk of losing money. Not to mention, and the main reason for this is because it's because of the challenges of communicating financial risk. But the benefits are big, mainly because there's tons of opportunities to accumulate wealth, and there's a broad group for investing. Now, there are some unknowns here. Mainly, how does investing increase, how does it affect wealth inequalities? And what are some positive impacts of small investors? Well,
I'm glad you asked. Recent studies suggest that there are many positive distributional effects of increasing stock ownership. So in this particular study, they were looking at variable pay and making stock ownership as part of variable pay and its effects on productivity, consumption, savings. The preliminary findings were that by increasing stock ownership in working class families, that they were more financially secure, which enabled them to spend more and be more confident about their spending. This created, is observed as a type of ripple effect as these families were becoming more and more financially secure and having access to a little bit more of that disposable income. That money was getting circulated back into the economy and was having tremendous effects on the market. We also understand the importance of financial literacy. Newly released findings from the Donahue Institute suggest that students as young as middle school age students can significantly gain from financial education and financial literacy. So this just goes to show that the benefits are there, and we need to start young and reach these younger age categories to ensure that people know about these wealth accumulation resources so that everyone can have access to it in the future.
As a financial institution, Merrill ethically has the duty to provide sound financial advising to Merrill customers and the public at large. It should increase investing opportunity and accessibility for a retail investor. And finally, it should educate new investing community of the potential risk with SPAC.
As a method to assess the quality of our ethical framework for increasing accessibility, we wanted to look at this through the perspective of the veil of ignorance. So proposed by John Rawls and his theory of justice, this states that in order to create a just society, we should not prefer to be any particular individual in the society and have a fair and equal chance of performing as any individual person. And so from an investing standpoint, this means that we want to create an investing environment that is sustainable for all, not just those who have been historically advantaged in investing in the stock market. This means that we want Merrill to democratize the market and allow for investing for people of all backgrounds of public companies based on how they support those individual companies or their causes.
Lastly, we want to address the concern with legal consideration as of SPAC, because SPAC is such a new popular investment tab that it hasn't has much regulation placed upon it, and that could change at any time in the future. Therefore, we think that Merrill should focus on helping their clients seeing SPAC that has good transparency and good disclosure. They should update their client continuously on the new regulation that are coming out that might affect their investment. And lastly, they should provide accuracy and also lead their customer to SPAC with a good team of management who are good at disclosing and reporting all these financial statements.
So now we have arrived at our final recommendation. We believe that Merrill can access this market of retail investors and promote market accessibility by leveraging existing software to develop an app that is focused towards retail investors and smaller investors. Merrill already has a few different apps focused on portfolio management and free online trading. And these apps have a plethora of resources about market trends and emerging industries. But as we saw before, it's not exactly accessing the retail investing crowd. And we believe that making an app specific for retail investors without gamifying the experience can be a huge benefit. So this would require a $750,000 investment to $1 million investment necessary to develop the trading platform. we see this estimate to be on the lower side of $750,000 because Merrill already has the existing software available to it. So it's not like you would have to build an app from scratch. And lastly, we want Merrill to be part of a broader education initiative where we educate our customers and the public alike about the risks of SPAC mergers and the importance of financial security.
About a band point, we want Merrill to increase education for all. We firstly think Merrill should host a marketing campaign focused on educating retail investor and also to improve SEO of the company app Merrill Edge. It also should target the ages 18 to 30 who are new to investing and who are just able to invest. And they should do that through social media, which is common and mostly used along this group. And lastly, they should partner with Girl Scout USA. As my colleague Ben has mentioned above, middle school is a really good age to start learning about financial. And also with the gender gap in wealth inequality that I mentioned above, we think that investing in Girl Scout USA would be a great idea to help these help these girls grow up, and they would know about investing and they would know about financial advising and all that it could help them in the future. And moreover, we also want Merrill to partner with community college to host investing courses and financial courses for the student.
So in total, we recommend that you at Merrill expand app development and gear that app development towards retail investors.
We also recommend that you market on social media and television, mainly using ads.
We also recommend that you should educate a community that will benefit the most from financial literacy.
Lastly, it is essential that Merrill communicate the risks and the benefits to new investors, both of investing in general and of SPACs in particular.
So all in all, based on some preliminary numbers, we are seeing a $750,000 investment towards app development and testing, a $300,000 base cap for a marketing campaign, and lastly, a $150,000 total donation to community colleges and Girl Scouts of America to help establish financial literacy programs. In total, our recommendation would be about $1.2 million, but compared to the benefits that Merrill can receive from bringing in a broader range of customers and the overall benefits to society by increasing the accessibility of investing, far surpass any cost that we see reasonable.
And lastly, with SPAC, we can make all a part of the pack. Thank you and have a great day.
Okay, thank you, Team Inclusive. Part 1 has been successfully done. Chuck, you stuck to the time limit and you gave a very nice presentation. So we're on part 2 now, where we, the judges, as members of the Merrill board, will ask you specific questions about your proposal. I'll kick off and then I'll invite the other judges to also add their questions with their Merrill hat on. So the first question I have for the teams generally is, I do have an ethical concern, and that is that we see as Merrill that, and you've acknowledged this is an underserved community, underserved population, right, in terms of culture and gender, and therefore they are also, they start out disadvantaged in that they have limited resources, limited income, disposable income. And the ethical concern that I have is we see what happens with some of the other opportunities that exist out there, specifically in the gaming arena. The temptation to get a lottery ticket or to go to the casino, and all of those are really an attempt by these individuals to multiply those limited dollars, right? They want to take their $5 and turn it into $5,000. And yet we see that this is a very deceptive, a very challenging situation, because disproportionately these underserved communities spend a whole lot of their very limited income on these gaming opportunities and tend to lose it every time. So what makes us different? How are we somehow gonna hold ourselves as ethically better when we're just providing one more avenue for them to put away very limited resources and potentially not see much for years?
That's a great question. And I think I can answer that with just by talking about Bank of America and Merrill just as being such a reputable, longstanding, and trustworthy company, providing sound financial advice for a long time. These other gamified platforms, Robinhood, Webull, yes, they're out there, and I would argue that they do intentionally gamify the investing experience. We believe that because Merrill is a very trustworthy company and that they are grounded in success and long-term success, that they have an opportunity to, yes, target this market without gamifying the experience. That accomplishing that mainly through education about financial literacy and the importance of, instead of going for these high risk investments, such as a SPAC, that you need to have a base of investing and have a strong long-term base. From my experience, last year, I invested in VTIQ. I did not have much money to invest, not a lot of income coming in for me. I maybe put $200, maybe $150 into VTIQ before its merger with Nikola. I bought those shares at $12 a share and ended up selling around $79, $80 a share. That opportunity, the opportunity of SPACs to jumpstart my portfolio was tremendous. And we want to make sure that retail investors are aware of these opportunities, because as much as we can gamify SPACs, with sound financial advice and looking for the right SPAC that is merging with an appropriate target company, the benefits can be tremendous. And for me personally, I have a friend who was tipped me off to the SPAC, said, this has some potential to go up a lot in the next few weeks. So I put a little bit of money, whatever money I had in, and it has really enabled me to jumpstart my portfolio and jumpstart my savings.
Yeah.
Okay. Thank you.
If I could also just add a little bit to the answer, I think it's all about education of the new investors. So as you said in your question, there's a large amount of, I guess, spending on things that are not expected to return money in the long run. If you buy lottery tickets, if you are gambling, or things that could potentially have high payoffs, in the long run, you're expected to lose money. And to emphasize the difference to new investors, that when you invest in the stock market, you're investing in something that is creating value. It's creating value for society, and in return, they're going to create value for you as well. And so because the stock market has this positive net effect on the ability to create wealth in society in general, then it in return will also create wealth for the individual investors. And as we illustrated in one of our graphics towards the beginning of the presentation, this effect, while maybe not as large as the effect of winning the lottery over the short run, can really, really add up over time, and you can make hundreds of percents on your money if you really stick to it and educate yourself about the principles of investing. And we believe that Merrill will play an important role in that, especially in traditionally disadvantaged communities.
Okay, good answers, Benjamin, Anthony, thank you. I'll open it to the other Merrill decision makers to weigh in.
So this is Lynn Zarcaro. I do have a question. So we are a fairly large company at Merrill. We have a lot of holdings, and a novice investor may look at us as a bit daunting to them, that it may be easier and more streamlined to reach out to a Robinhood or find to Joe's point, the quicker way without having to really dig in and understand all the nuances of investing, especially when you're talking about Merrill Lynch. So my question becomes, what approach do you feel is really the most valuable for the the new investor in terms of education? Is it through the app? Is it commercials, face-to-face? I tend to think that a new investor is not going to be very savvy if they're looking just at an app or listening to a TV commercial. So I wonder what your approach is going to be to gain their interest with Merrill as such a daunting large company.
Yeah, so thank you for the question, Lynn. And in terms of Merrill's relative large size compared to those of its competitors and how this might be used to the benefit of new investors, I think something that we consider to be important is that Merrill and Bank of America have a long-standing history of providing these opportunities to the more average American than maybe some of the other large banks in the country. It has more of an American feel for the middle class worker than the names such as Goldman Sachs or other large investment banks. And so we think that we can leverage this to promote Merrill's image as supporting this average investor. Now, in terms of pointing them to the correct resources, I think that the app could be a perfect starting point for this. And by allowing them to learn the beginnings of investing, we can pique their interest and then give them later resources that they could turn to learn more and more about it. Having, of course, services that we can provide from a financial professional would be an option to perhaps increase the amount of resources that we're offering. But in terms of the free underlying baseline information that we can give to the new investor, this app would be perfectly tailored to have all of the fundamentals without any of the confusing bells and whistles that might be introduced as one learns more and more about how to invest in the stock market.
And I want to bounce off Anthony's point of just being closer to the community that we are targeting. I feel like our plan of having education specifically targeting community colleges and also a Girl Scout, we can bring the Merrill name closer to the people in the community we want to target. So that is not as scary as it used to be, or like as far away as it used to be. And also we feel like if we do a marketing campaign and then we want to spread to social media, that would be a good idea for people who like not as tech savvy, because they will have a social media and they can still learn about the Merrill, the feature and the services that Merrill can provide them through their just normal everyday social media.
Hi, this is Robert. I've got just a perspective and then a question. So I am very cognizant of the need to educate, especially people at a younger age, on financial acumen and such. However, as you mentioned, the statistics behind how women advise and such. But I'll point out that we are top rated amongst retirement advisors in the United States. We are top rated as far as next gen wealth advisors in the United States. We are already the number one. We've been recognized by Working Mothers Magazine as the top company for helping women to invest. And Forbes has also recognized us in the same light. So I don't quite see the ROI on us pouring a lot of money into those markets when we've been successful. And I'll take your feedback on that, as well as my other perspective. You look at your chart of SPACs. There was the blip in roughly 2007-ish in SPAC investing relative to classical markets. And then the recent blips, well, those seem to pretty much correlate to the way the recession and such happened in 2007 and 8, and people looking to make money off of the debilitating effects of that, as well as somewhat the recent. So my question to you is, if you look at this historically relative to other years versus our mission statement, how does this really become a longer term good choice for how we prefer to lead investors, where we lead them or where we don't lead them in the future. So I know that was a mouthful. If you can please decide to respond to either.
So I can respond to your first point. And I think we at an Inclusive Investing Consulting Group recognize Merrill's success in closing these gaps that we see and these inequalities that we see in the United States, and encourage further services to close these gaps even more. We want Merrill to be that front-running name for retail investors as well as larger investors, people who already have, that financial security. So we know that you have the resources available and you have the track record to prove it clearly that you can help people build wealth and close these inequalities. We just think that it can be done in a more effective manner in an app that is targeted, that is specifically targeted at this audience. And the investment is minimized in a way because you do already have this existing software for these other apps that you have focused on portfolio management. So in my view, I see it as a small investment to kind of expand the services to target this younger age group, this retail investing market even more, and the gains that you can reap from that would surely be plentiful. To address the second part of your question, sorry, I just lost my train of thought there.
I think I might be able to say something. Yeah, with respect to the second part of the question, which I believe was about how SPACs can be used to kind of tie into the overall long-term focus that we want our new investors to have when they're entering the market. I think that the cause of the boom in SPACs and the effect of the boom in SPACs are obviously related, but not necessarily the same. And so because the increased market volatility, as you noted, maybe in the Great Recession and the more recent market downturn, has propelled an increase in the number of SPACs because of their easier ability to raise capital for the monies who need it in more volatile market conditions. And now, so I think that was the main cause of the increase in number of SPACs. But as a resulting effect, this can give access to those who normally would not have access to the traditional IPO route. And therefore, it allows for a lot of the large gains that are made at the beginning of the company's stock lifetime, public lifetime, to be accessed by people who traditionally would not have been able to have access to this. And of course, our investing app is not only going to be about SPACs. We want to also encourage people to focus on long-term investing, to buy and hold, to increase their overall wealth towards retirement. But SPACs are one method that we can give this access, which has traditionally been withheld from people who are not sophisticated investors, to reap the rewards of the early public life cycle of these new companies.
I would just go on to say, oh, sorry, go ahead.
No, please continue.
We understand SPACs are not the long-term solution, but that does not mean that retail investors should not have access, should not be aware of the opportunities that larger investors have. So we can leverage SPACs to help retail investors, but then still have that strong base of sound financial advising that Merrill can provide for the long term. We know SPACs will be probably decreasing in popularity over the next few years as the market recovers and becomes less volatile. But for that, we don't want to limit investors' opportunities to these gains that other larger investors have.
Okay, yeah, I still don't see the ROI argument for us pouring in the time and money specific to SPACs, but I do understand your answer. Thank you.
Okay, hard going last because all the good questions have been asked. But my question one is, what is VTIQ trading for today?
VTIQ is trading, I believe, somewhere around $15 to $18 a share.
$9.94.
$9.
So market timing was in your corner, Mr.
Mhm.
Hall.
Yes.
How do we educate the rest of this underserved clientele that we're targeting? Do we offer financial advice and advisor's assistance free of charge below a certain portfolio level? Or is that going to be part of the continuing? And I want to point out, as Robert talked about ROI, there's a continuing investment here every year. You can't just buy the ad and run it continuously. You have to educate an ever-moving process. That's my question. How do we work on this continuing education and the specific high quality timing necessary to, as everybody says, you can't time the market. So how are we going to help them?
So I think with the case of VTIQ, you make a very good point that the stock has plummeted since that initial spike. But for me, with some pretty when I first invested and got into this stock, I was not really familiar with how the market works and how I should be setting in my portfolio at all. But with a small amount of guidance, I was able to, I wasn't able to predict the perfect point to sell. Obviously, I wasn't able to, but with a little bit of advice about, if the stock goes up 200% in a day, it's probably a good idea to sell some of those shares and reallocate that money into your portfolio. So I do think that Merrill provides access already to some good free resources for these retail investors. On your website, there's a very helpful chat bot and also a messaging service that you can have with an actual advisor to ask them questions about how to start up the account or kind of where to start. That was super helpful. And that's kind of like the existing software that I was talking about, the existing resources that could be implemented to increase the accessibility to retail investors. So my timing was good, admittedly, but I think that with a little bit of guidance, that many other investors in my shoes could have made the same decisions. And Merrill providing so much market analysis and information that can be readily available for these new retail investors. I think that by promoting long-term investments and giving them calculated predictions for more risky investments, that people like me, working class retail investors, people with not a lot of money, can establish a portfolio.
Okay, and last question as a follow-up to that, did Inclusive Investing Consulting Group consider entry-level mutual funds specifically tailored to SPACs or other sort of venture capitalist type investments so that we mitigate the risk of market swings?
Yeah, so that would be I think a good idea of a way to get access to what we've been talking about, the initial burst and value of these starting companies without the significant downside risks, as you noted, of trying to pick stocks and time markets. So that would also be a very good idea. In response to kind of the ROI questions that both you and Robert were asking, and the continuous investment of our education program and our ad campaigns, we realized that this is going to be a lot of money that we're going to have to put in over a course of time, but it's not simply an expense. This is an investment in ourselves. By getting access to the largest size, or rather the largest pool of untapped investors in America, this is the 90% that we're talking about, we can earn a significant amount of money, even if we're only earning a small amount of money on each of these individual investors. And so by benefiting them, by giving them access to markets, by allowing them to become more involved and take control of their financial stability in the future, at the same time, Merrill can receive significant returns because of the great economies of scale that there will be from providing education to not just 5% of the most educated investors in the market, but rather to 95% of those who have traditionally not had access to the markets. And therefore, Merrill can be one of the first to gain access to their capital allocation and therefore earn money down the road from any other services that they may use or require from Merrill.
Thank you.
Okay, so I am conscious of time. It's about 8 minutes before the top of the hour, which means we have a little over 20 minutes left in this session. We have now at least done the formal team presentation. Every judge has had a chance to ask a question with their Merrill hat on. I will do a quick survey of the judges. Lynn, Connie, Robert, do you want to ask any other questions with the Merrill hat on, or are you ready to transition to taking off our role playing and giving feedback to the team? You tell me.
I'm ready to transition.
Okay, we're good there?
Yeah,
I'm
to
ready. I'm
transition.
ready if you'd like to transition.
Okay, fabulous. So it is transition time. We're in the third and final piece of the program, and we can give you the unvarnished feedback as quote unquote seasoned professionals. So first and foremost, team inclusive, what a nice, thoughtful, thorough presentation. From my perspective, nicely done, thank you. I want to just kind of maybe, I'm not sure exactly how to characterize this bit of feedback, but it's an observation, maybe a thought, and do with it what you will. And I don't think it's just urban myth or urban legend. I forget where I saw this statistic that in underserved populations, they are much more likely to want to hide their money under a mattress than give it to a bank. There is a trust issue with underserved communities and the big banks. They're immediately distrusting big banks, right? So immediately that's a hurdle that has to be overcome, that massive trust issue. That's kind of why I think these small community banks still exist, that they haven't all disappeared because of the big boys, the Bank of Americas and Chases of the world. Because those small banks, they're the neighborhood people, and they have a connection with these underserved populations. So that's where they can build some trust and respect. But for us, for a Bank of America, we've been in the news, and not for good things necessarily, right? Big banks have had big troubles. So that whole trust issue that you have to overcome. And then to your point, Benjamin, and Connie kind of touched on this, timing, you were fortunate. But the other massive, now infamous case study is GameStop, right? And a whole bunch of people lost their shirts by putting money in GameStop in the last 6 months. So all it takes is one of those issues where, you get a whole bunch of people to say, oh yeah, please suspend your disbelief, trust us. And then, market goes down for some reason. And the first massive case of a bunch of new investors, underserved investors losing their shirts, what does that do to this whole plan, right? So just an observation, feel free to respond or incorporate or whatever you think, but it's just something to think about in addition to what is already a very solid proposal.
Yeah, let me give you, as you mentioned, the amount of time we have left and such, I'll just give you my feedback. A fairly well-paced presentation, a little thin on things like ROI and RPoint. I would have liked to seen a little bit more detail on that. I completely agree with you. The issue is financial education. And tied into that is that the vast majority of lower income people are reactive and not proactive. And I think part of your selling point on either developing or evolving our app or information would have been maybe pointing out this lack of just financial acumen that exists, and to build name recognition and trust through, focusing on that in our efforts. Because I agree with what he just said. People don't have a lot of money, but if you can establish trust and honesty with these people, then you have the opportunity to get the money out of the mattress and help them do better with it. Sure, everyone likes to talk about the couple of winners, and in 2020, it didn't help that a lot of things like sports and all that gamblers put money into went away, and they were looking for places, and gambling interest in market investment shot up, and highlighted all that. But yeah, I think overall, though, your presentation was done reasonably well, and I commend you for that.
Thank you.
So this is Lynn. Nice job, everyone. I enjoyed the presentation. I thought it was well laid out. I would echo the same with the education. From my perspective, as I think about trying to go out in the communities or trying to touch, right, the uneducated investor, you seem to be targeting a younger group. And I look at that solely because you're talking about the technology to do it. But I fear that there's another group that may shy away from the technology and want you to be visible in the community, right? And I think that level, the younger investor certainly has more time to increase their wealth, but the kind of the middle-aged investor still wants to increase their wealth and may not rely as much on the technology of the app, et cetera, for their education. And so I think as you look at the different stratas of the age groups that you're trying to support in this consulting area, I think you have to think about how to educate the different age groups differently, okay? And I think that's important, unless you're only going to start looking at the real young investors, and then you're leaving out a big chunk of a potential client base. So that was one comment. And then the other thing, and I'm always big on competition, right, is for a same size business of Merrill, who would have been the competition, and have they been successful in what you're proposing to Merrill to do, right? And so did you take the opportunity to really benchmark a same size business to understand if this is a success approach, are you going to be outpacing your competition? And what can you do differently to, how do you be the differentiator if you do have competition in the same size market? So those are my thoughts, but great job.
Thank you.
Yep, it's superb observation, Lynn, and for the presenters to think about. Many people become single in midlife, either through death or divorce. And many of them have let the spouse manage the resources. So that's a tremendously ripe market for education. I want to focus a little bit more on presentations that you made, a couple of just not nits or gotchas, but some suggestions for when you present in the future. At one point in your presentation, the dialogue said, and should do this. Never recommend you should, always recommend, okay? And you did do that later on in the presentation, but that was after, that one switch was already turned off. In the one-page flick sheet on your presentation, there's a line, many working class people who are receiving aid from the government are looking to invest. I've got to tell you, they're not looking to invest. They're looking to buy food or put gas in their car or make the car payment. So I go to the study that you reference on the women and the gender gap. And the question is, was that among working men and women or men and women completely? Because like it or not, in all the equality that we have, many women are still at home raising kids. Okay, so need to talk apples to apples there. Another place you gave a quote that was dated 2011. Really need something a little more current than that if you're going to talk specs, because as you say, you told yourself in one of your opening slides, they've really taken off in 2020. So just little things like that. Currency, knowing the audience, speaking, and even if they're not working, just why is there this disparity? Same thing, minorities and the impact of COVID. Why was there a disparity in wealth? Well, you know, a lot of them did not have the jobs where they could telework, or they had to take public transportation, and therefore the risk of exposure increased. So providing all the information, statistics are easy to do. Oh yeah, one last thing. And Erica, please take this in the construction that it's meant. But when we spoke statistics, we were pretty quick. And that goes across your generation. You speak a lot more quickly than us older people can hear. When you talk statistics, let them know what they are and be sure that you don't go from one to another. So beyond that, I agree with what everyone said. Very well put together, very well done. You guys did not read the presentation. You know the information. Thank you very much for your participation.
Thank you.
Yes, thank you.
Yeah,
Thank you.
fabulous.
Thank you.
So Lynn, Connie, Robert, beautiful input. Any final questions or comments from the team before we wrap up this segment?
We
No,
appreciate,
I am good.
Yeah, we
we
appreciate
really
all the
appreciate all
feedback.
the advice you're giving us, and we hope we can improve in competitions in the future. So thank you very much. We appreciate your
Well,
input.
The
Thank you.
big competition is life. Okay, go out there and kick it in the tail. Okay, you guys are doing well.
Thank you.
Nice job. Good luck, everyone.